Hello, everybody. I'm going to give you guys a few minutes to start signing in, get situated and comfortable. We will be starting in just a couple of minutes. Welcome, welcome. For those of you who are just joining us, we will be starting in just a few minutes. So I want to give everybody a chance to sign in and get situated. Welcome, everybody. We will be getting started in just a couple of minutes. Okay, I'm going to go ahead and get started. Welcome to the ERPFixers Ask a Fixer 2021 webcast. Today's date is June 2nd, 2021, and today we'll be talking about SAP product costing configuration and beyond. This will be presented by our expert, Ashish Sampath. So what is ERPFixers? We connect you with SAP experts to obtain quality immediate solutions for your SAP system. We consist of thousands of SAP freelancers globally in all SAP modules who are ready to help and assist with their knowledge in SAP. We offer an online platform, SAP Optimization Assessment, Material Ledger, S/4HANA Transitional Roadmap, and Cost Transparency Reports. For more information, please visit our website at ERPFixers.com. About Ashish, he is a finance and costing professional with more than 2 decades of industry experience in the SAP finance and controlling space. He's provided solutions in SAP controlling, including product costing, material ledger, and cost center accounting. He is also the author of several books on controlling. First Steps in SAP Controlling, Expert Tips to Unleash the Full Potential of SAP Controlling, and SAP S/4HANA Delta for CO configuration. He is based in Chicago, where he works as an independent SAP FICO consultant. And for those of you who have not joined our previous webcast, we will be hosting a live Q&A at the end of this session. If you could please submit your questions, either the chat box or the Q&A chat box that is at the bottom of your screen. I will be recording all of your questions, and Ashish will be ready to answer your questions. As well as we will be posting the full recording and the answers to your questions at the end of the presentation and going into next week. Go ahead, Ashish.
Great. Thank you, Jessica. So thank you all for your interest in this topic, and thank you ERPFixers and Jessica for giving me an opportunity to speak about this topic. Product costing has been my an area of interest in SAP controlling, and I've worked. That used to be my first project that I worked on back in '98, and it's been near and dear to me in the heart. But what I've also noticed is that when we speak about controlling product costing, people mainly speak on configuration. But yes, of course, there are also master data, transactional data that's related to it, as well as a lot of integration touch points with, be it production planning, with materials management, sales distribution, or within FI and CO itself, how they are tightly linked and integrated. So thought that this kind of topic will help everyone go through some of the experiences that I have collated over so many years, and things that I have gathered. So would like to share this with the team. So we'll review some integration touch points, very high level, just few examples here, there, and also look at production planning and controlling example with data of data flow for activity types. Again, this is something that requires a lot of integration between the whether it is recipe or routing, work center, cost center, between production planning and controlling, with one or two examples. And between and FICO, what kind of options do we have for costing of freight and incidental costs? Again, this has been an area where there are a good number of options, both on plan as well as actuals. We'll look at the pros and cons for each one of them with one case study example. And then we'll also look at how production planning, materials management, and controlling are integrated. Here we'll look at errors in product costing. I think you may have seen those in the course of your career and your day-to-day life as well. Some of the error messages are a little cryptic in nature. So what do we do to resolve them, or how to overcome them? That's the part that we'll see. And then lastly, we'll look at account determination fundamentals. Again, these last two topics are kind of very popular, in the sense that lots of people have given me feedback that okay, we want you to speak more about this. So I thought, okay, why not include them in this session as well. So the integration conundrum as in a dilemma or confusion. What exactly do I need to be aware of? And here we look at few examples, but at an overview, it's all around the integration, right? The main power of SAP as an ERP comes in from the integrated nature of the SAP software. And then with so many modules like PP, SD, what we generally call as the logistics module, they speak to each other, but ultimately the overall visibility comes up only when we look at the finance and controlling flow. And we as costing professionals, if we are aware of those integration touch points in the supply chain and others, it kind of helps us understand the big picture as well as understand the power. A long time back, one of my senior mentors had told me that if there are two roles which are very powerful in an organization, it's basically MRP controller and the cost accountant. And that goes to a great extent. I mean, they probably are generalizing it, but in general, if we see that there is a lot of truth behind it, that you'll notice that there is a lot of importance to those roles. So we look at some examples. When we look at materials management and product costing, you'll hear a lot of module names or terms here. So I hope everyone is comfortable with that. So COPC is nothing but our product costing module of controlling. So we calculate standard costs at the beginning of the period in product costing, and those costs are used to record goods movement throughout the month. Now, of course, if you say that I'm using moving average price, that's fine. That also somebody is setting up with the initial phase, right? That's how it is usually determined. And then again, we look at some integration points between FIGL, AP, and COPC. So let's say we are talking about purchase of raw materials. So we have goods receipt, we have invoice receipt. Invoice receipt tracks the vendor amounts on the FIAP side, and then price variance shows up, and which hits our GL accounts in FIGL when we compare the standard price to the PO price. And that's again something that kind of touches the COPC module. And again, when we look at a goods receipt, invoice receipt, that's just one event. But that one event has to pick up data from so many modules. That's what we're trying to demonstrate here. And between PP and COPC, raw material cost is calculated. We use quantities from BOMs and then use the procurement prices to cost them. And then when it comes to conversion cost, as in activities, we see the data coming from routing, so activity quantity, and the rates come from our cost center master or cost center transactional data, KP26, as you would know. And then again, when you look about the production and process orders, they use this information uh, for consumption, for production, and for the month-end settlement, with variance settlement, and so on. So again, a lot of touch points here, and that's where the real power of SAP usually comes in. Again, there are more examples here. We'll touch through them very quickly. COABC, as in activity-based costing, uses activity price, and then there are expense purchase orders which are kind of charged to the cost center or to internal orders. But when it comes to direct material procurement, we have raw materials which are kind of taken to the inventory, to the balance sheet side. And then when you have the consumption, it again reduces the inventory and charges to the consumption account. And then of course there's asset accounting. Capital equipment purchases can be recorded through materials management and asset. And then when it comes to sales distribution, here also the outbound movement of goods on customer sales, we record accounts receivable, we record sales in FIGL, and then COPA also records the cost information to arrive at the profitability. And again, in this example, I have taken characteristics value field, the typical costing based COPA. But if you're using account based COPA, then you don't have value fields, but you do have the characteristics which get populated. And then it comes to samples, right? Those are again charged to specific cost centers. So somebody says, hey, my cost center is blocked, what do I do? Obviously you have to supply to the, either unblock the cost center or supply the correct cost center at the time of sales order. So again, a lot of data flow, configuration, and the master data, transactional data, they are all interlinked, and one can control those to meet the business requirements. So with this background, let's look at an example of an integration touch point between production planning and controlling, and we'll look at accounting for activities. So we are going to look at these three main areas: configuration, master data, transaction data. Within configuration, we'll look at standard value key and the parameters and the formula definition. And within master data, we'll look at the resource master or the work center master, where the formulae are maintained, and then how the recipe uses that information for the activity quantities. And finally, we'll look at the transactional data for standard costs, how this information all comes together, and then finally the actual cost part. So here is a resource master, CRC3. And we have two tabs here. The standard value key tab, it's on the basic data, and it's right here in the middle of the screen. In this example, SAP1, which is SAP delivered standard value key, is highlighted. And when we go to the costing tab, which is in the second screenshot to the right, you'll notice some three activities with their or three parameters, with two of them activities maintained and two of them with the formula maintained. And then again, these formula are done behind the scenes. So we know that when it comes to labor hours, we want to calculate the operation quantity divided by base quantity and divide by operational splits, or operation splits, I should say. And same with machine hours. But the question is, where is this formula defined? And we as costing professionals may not have thought of much on, can I change this formula, or can I add another activity type here, or can I add another parameter here? How do I do that? And those questions are genuine, and if you have explored them in the past, it's kind of between costing and production planning. So let's look at those. One of them is OP19, which is the place where we define the standard value key, and the second one is OP7B, which is where we define the parameters. Here we have said that there are three parameters for setup, machine, and labor hours in OP19. And when we go to OP7B, you'll find more details around it. They're saying that the standard value unit for setup, labor, as well as machine hours is minutes, which is of course a dimension of time. Now, if you say you want a weight based unit, then of course you have to select the mass dimension. Now of course it's a one-time setup, you don't change this very often, but we be very careful on what unit of measure as well as the dimension you select here. So if you have defined minutes, then obviously you can't have kilograms as a unit of measure, right? That's the reason why we have to be little careful on selecting. But good news, SAP allows lots of options, and in the standard list itself, when you go to OP7B, you'll find lots of parameters. Most clients copy them as reference and then create your own parameters and create your own standard value keys as well to assign. That way you can make changes in future. That's again the best practice. So if we look at the formula definition, which is further down behind the scene in OP54, for each of these formulae, you can define what all parameters are to be used. So in this case, SAP 03 times 09 times 08 and 11. Now what are these? When we go to the detail, you'll know that, okay, these are labor times operation quantity divided by base quantity divided by operation splits. It also has some more control indicators here which are useful. So of course this is just one view of two separate formula keys, but when you look at the same formula key in behind the scene table TC25, that's when you see more of the formula. So again, this is just another view. So if you are adding a new formula with a different parameters or different calculations, then those will all be stored here. Now let's look at the recipe. So this is C203 master recipe. We are going at a specific operation level to see that a control key PI01 is used with base quantity of 1000 kilograms with a charge quantity. Now here is where the conversion comes in picture. So be very careful. If here you have said that charge quantity is 1 to 100, then all your calculations will be proportionate. So we have to validate this data plus what resources used. Now, if you recall, this is the same resource that we had in CRC3 when we looked at the very initial screen. And here we have identified that for 10 machine hours will be required to manufacture 1000 kilograms and 15 labor hours will be required to manufacture 1000 kilograms. So roughly we can say that 1.5 laborers are attached to this machine. So likely that you're sharing between two machines. That's what one would interpret this as. Now, this is where, I highlighted that it may be an important piece to design at the very initial phase from best practice point of view. You may want to define all 6 parameters in the uh, in the very beginning. Why? Because what if you use these activities in the future? So just one consideration during your initial go live. If not, then you have to go update not only the standard value key, but you have to update all resources, and then you have to update all dependent recipes or work centers or routings. So that's where it becomes a little interesting. Now, of course, if we say that for 1000 kilograms I'm making this, so if I were to use 5000 kilograms, everything will be multiplied by 5. For 10,000 it will be multiplied by 10. That's how the formula comes in picture. The formula, as we noticed, is behind the scene in the resource or in the work center. So let's look at a CK13, and this is of course a display transaction of material cost estimate with item category M for material and E for activities. So here it shows us these two activities, machine hours and labor hours for the given resource 01 and the given cost center C51100. Now here we have the 150 hours and 100 hours. Why? Because in this example, this was a 10,000 kilograms. So obviously our base calculation quantity was 1000. So everything is multiplied by 10. Instead of 10 machine hours, we have 100. Instead of 15 labor hours, we have 150. And then ultimately, when we look at the activity rate and multiply them, we get the total value. Some of it is fixed, some of it is variable. And where is the raw material cost coming from? From the resource for material. It's coming from the bill of material, and its price is of course coming from either purchase info record or plan price one or some other costing methodology. So in general, this is where you see your integration of production planning and costing come together, because it has used this specific recipe for the purpose of costing, and it has used this bomb for the purpose of costing. Now, obviously, here you see we have used usage 1, which is our production bomb. I've seen clients implement even usage 6 costing bomb, or usage 3 universal bomb, and so on, or some other custom ones. Why? Because they want to keep a frozen bomb at their disposal. Lastly, we'll look at the activity absorption on orders. How exactly is it determined? So if we look at this, it is nothing but KSB5, a controlling document, which basically says that I confirm 1900 minutes of activity machine hours, and I confirm 1300 minutes of activity labor. So a little over 30 minutes and 20 minutes for each of the two activities. Here we of course have the amounts that are used, and note the cost elements that are used here, along with the accounting entry, which basically says debit the order and credit the cost center and the activity type. That's how the accounting entries work. And the predetermined activity rate was used. Now, what happens in the FI side? So again, for those who know the difference between classic general ledger, the new general ledger, and the S4 HANA, the treatment is little different on the FI side, but the source is always same on the CO side. That it's always debit the activity type, secondary cost element, and process order, credit the uh, cost center and the activity secondary cost element. And then, of course, on the actual side, we have the option to revalue your process orders or production orders at month end when you do KSII, activity rate calculation, as well as CON2, which is the revaluation of orders. So those are the important pieces. So again, just in summary, a lot of value in integration between PP and CO. A lot of good can be done when the data is set correctly, but there can also be a lot of confusion when the data is incorrect. So that's where the integrated nature uh, and the power of SAP comes in. Okay, let's move on to the next topic on freight and incidental costs, and how to add freight on the total cost. So here is one example that I would like to run throughout our discussion for this topic. Let's say in our scenario, the base price of the material is $10. The freight surcharge is estimated is $1, and the total estimated standard cost is 11. Now, this is something I want to depict in my standard cost estimate, preferably with this breakdown, so that whenever I go to that estimate for the raw material, I always see this breakdown of 10, 1, and 11. And then on the actual side, we want to say that if the purchase order was created for a price of $10.40, and the freight vendor charge actual came up to $1.20, total actual cost came at 11.60. How do I track this variance in such a way that total variance is available at 60 cents? So 11.60 minus 11. But I want a breakdown of how much of it is pure purchase price variance for raw material, that is 10.40 minus 10 is equal to 40 cents adverse, and the freight charge related to $1.20 minus $1 of estimate, is 20 cents. So how to meet this? And it's a very interesting requirement, and standard SAP out of the box has several options. You can always customize it or enhance it. So what are the options? We'll look at that. So on the main requirement or the accounting principle is that you have to capture the landed cost of all your raw materials, as in the cost as it comes to my warehouse to hit the loading dock. Till then, whatever costs have been incurred, I want to include them. So these are the options. We can either use a costing sheet, or use additive costs, or use a user exit for material valuation. These are just three options. Now, of course, some creative people have done a lot of other options also, but these are the three most widely used, if I want to put it that way. And then how to do it on the actual side. So again, people have created freight vendors on material purchase orders, and we'll look at the pros and cons of each of these. Let's go through the options. And then some clients have created blanket purchase orders for for freight vendors, and then where we allocate freight cost to materials at month end. Some clients say that, well, it becomes too complex to create a purchase order, I'll create a direct FI invoice for freight vendors, which is possible. Even in standard SAP it allows. In that month end, I'll allocate the freight cost. What will be the basis? Either volume or weight or some other methodology. And then if you're using material ledger, we can always use MR22, debit credit material. This is also a very powerful feature on SAP. And then when it comes to using purchase orders, so one can say I will create a freight accrual pricing condition, and that can be used for the purpose of accruing my freight costs, and then actuals also are captured on similar lines. So we will look at that option. The last one is a very creative option, the month-end adjustment journal entry, which I've seen at few clients, and we look at that. It's kind of, if you don't want to go through all this pain and want to make it a little easy on the accounting side, then this is the one. But there could be timing issues, so we look at that. Let's see the, I think costing sheet. So costing sheet is, as you may know, KZS2 or KZS2 is the transaction code for costing sheet. So as far as base material price is concerned, let it come through normal route, purchase information record, or through plan price one or any other means, no issues with that. Now also maintain an overhead group in the material master where it's in the costing one views. Do this through MM02 or a mass transaction, and then maintain the rules in costing sheet saying that what is the basis. Do I do it based on weight or do I do it based on percentage? And what is the surcharge percentage? Is it 2%, 3%, 10%, or is it weight based? So many dollars per kilogram and so on, or per pound. And then when you run the costing based on the calculation that we have defined in the costing sheet, the itemization view will have the breakdown of base material cost and additive cost. So going back to our example, $10 will come from the PIR and $1 will come from the costing sheet. So there will be two lines in the itemization view. So that's where you get to see that. But this itself creates another limitation, that this method would allow capturing only one cost bucket. If you want to get additional breakdown, saying that all my incidentals are broken down into 4 buckets: freight, duty, insurance, and taxes. Now, how do we show that through costing sheet? That's not very easy. Even you talking about 2, you have to have multiple combinations in your overhead group in the material master and maintain it. So that's where it becomes cumbersome. So again, a simple solution to use costing sheet, but there is a limitation that you can only have one bucket in the costing. Let's look at the other option, additive cost. So where the costing sheet ends and its limitations start, additive cost gives you an advantage. What is the advantage? That again, base cost, don't worry, do the same thing. But now additive costs, you maintain cost components or additional line items or the variable additions to cost through CK74N. As you know, CK74N is an additional transaction. So once you have had additive costs, they will be pulled in the costing run, CK11N or CK40N. So of course you have an additional step, but see, there is no limit here, that you can have each of those 4 buckets that we saw on the previous slide. Those can be highlighted here and then brought in. And then when you look at cost itemization, it will show each of those 4 buckets. So $10 for the base price, and then let's say the remaining 4 buckets are 50 cents, 30 cents, and then 10 cents each for the remaining 2. Those will be visible. But disadvantage, you have to have an additional step of additive cost. Also around user exit, this is yet another feature which lots of clients may have explored, but the challenge here is that the procurement cost is maintained in total. You can't simply add it separately. Now of course you can have this method in combination of costing sheet as well as additive cost, but then in that case you only maintain base material price in the custom table or in the price trending table. This is just one another option. So here we spoke about all the 3 standard cost options for capturing freight on standard cost. So let's look at the actual side, what happens. So create freight vendors in material purchase orders. But here the challenge is you need to identify freight amount for each PO. And then the challenge is when the freight vendor gives you a bulk invoice of, let's say these are all the invoices for the prior week or prior month, then you have to break it down by each PO and then do the Miro invoice verification for each PO. So that's the cumbersome piece around here. Blanket POs also have similar issue, that how to allocate the freight on month end. So instead of saying that my base material comes from vendor X and and my freight vendor is, let's say, UPS. So UPS, uh, one separate PO will be created, and then you create an enhancement to allocate freight cost on materials. So look through all the procurement or goods receipts, identify their weight, and then allocate based on that weight, or based on volume depending on the requirement. And then that basis of allocation should be consistent, right? Otherwise there can be confusion. The other discussion is, don't create a purchase order, just create FI invoice, FB60, for the incoming invoice from vendor without any PO. But again, here you'll need an enhancement. Same with MR22. You can do this in material ledger, add the add-on cost for inventory, but again you'll require a possible enhancement. You can of course always calculate this outside the system on Excel and then load it, but again there will be some work involved here. Where I have seen some clients benefit from is this accrual pricing condition. So as you know, there are three accrual conditions: RUB1, the accrual amount or accrual based on quantity; RUC1 and RUE1, accrual based on percentages. They are all pointed to an account determination key, RUE. So what this enhancement will do is it will read the surcharge from standard costs. So again, it's very important that you classify your base price and freight separately. So you say freight is allocated to this specific overhead account through costing sheet or through additive cost, and that account is used to read the standard cost for the surcharge. And when the GR occurs for that given material at $11 of standard cost, 1040 of PO price, this $1 which is read from the standard cost estimate is credited to this freight accrual account, which is mapped to this RUE account determination, and it is posted to, let's say, a cost center or any internal or any cost object is fine. And at this stage, you have a very accurate picture of purchase price variance, those 40 cents that we were looking for. Why? Because we gave this $1 credit. What happens if you don't give this $1 credit? There will be a false PPV, favorable of 60 cents, which you have to adjust, which we'll see in the coming slide. But here, this kind of gives you a good advantage. But remember, this requires an enhancement on the purchasing side, that you have to, have that pricing condition maintained at the time of creating the PO. It has to read the standard cost estimate and then populate the pricing condition for the accrual amount for freight. And then when an actual freight invoice is received on the same invoice, or on a different invoice rather, it will be posted to the cost center. So now we have a 20 cents of adverse uh, uh, price variance on the cost center. Why? Because we gave a credit for accrual at the time of GR, and at the time of freight invoice we have a 120 posting. So that's one approach. This one is the month-end journal entry that I was highlighting. Let's say you don't want to get into the complexity of creating user exit on the purchasing side, or don't want to disturb the PO process. So what you do is you at month-end you adjust or reclass the purchase price variance. How is it done? So first of all, at the time of GR, it will create that 60 cents false favorability as we highlighted in the previous slide. Now at month end, read how much quantity was received, and for that given quantity, what is the freight component, and that's where you will get the $1. And then here you credit the freight recovery, and when the freight invoice comes in, you have a $1.20. So net impact of purchase price variance will be false at 60 cents at the GR time. At journal entry, we posted that what was supposed to be the assumed freight or the estimated freight, and now we have a net unfavorability of 40 cents. So note that till you do the journal entry, you don't have the good picture. So people have said, oh, can I do this on a more frequent basis, on a weekly or a daily basis? Yes, that's possible. You can even write a program to automate this journal entry. That should be possible. But again, note that we are purely relying on the standard cost estimate to get the breakdown, as well as an accounting journal entry to adjust the price variance. You are not touching any other module on purchasing side, and several clients have felt comfortable with that. Why? Because purchasing is a sensitive function, right? You don't want to put it at risk because of a requirement on the finance side, whereas some clients have said, no, I want it all integrated, so all depends on the requirement. And then the freight impact is also similar to the previous one that we saw. So that brings us to the third topic, product costing messages and how to resolve those. And in case anyone has joined recently, as Jessica highlighted in the beginning of the meeting or the webcast, that if there are any questions, please jot them down. We'll try to address it in the next few minutes towards the end. So again, to give a little background, getting an accurate error-free costing is every controller's goal, right? Why? Because the accurate the cost, the better the forecasting on the actual side. The variance is minimal, or it's kind of known, and that's where we want to have an error-free accurate costing. So you remember, we have to have a correct cost estimate, otherwise you cannot release the cost, right? So financial postings will not be correct. So how do we ensure a costing run is error free? Well, it's all around master data and the integrated nature, and a lot of master data maintenance also comes through discipline and the organizational processes, and it's a long topic in itself, right? So we want accuracy everywhere. So once you analyze those errors in detail and then resolve them, it's more of an iterative process, right? So you resolve some error, some other error comes up, and then you fix something else, and then you keep doing this till you have no errors. So there are errors that will show up in red with E message type, or W as the yellow ones or warnings, and then I for information in green. So an example could be CK240, cost component split costed with value of 0. Now those who are totally new, they may get confused. What does it mean? I don't know what to do. But those who have seen SAP and have done costing for a long time, they know it basically means that the rolled up cost was 0. There was no answer, and that's why it gave you that error. So those messages at times are cryptic. So we have some examples here that CK197 GL account does not exist, costing items for material without cost element, and so on. So message class and message number, those are important. So KL023, no control record for activity type in a specific version. Now those are real examples that came up in this system with this screenshot. So how do we address them? That's what we'll look at in the upcoming slides. And there are 4 pages of it, so there's a lot of info. We'll try to address as much as we can, but this is more of a compilation of frequent messages, frequent error or information or warning messages. Not all of them will occur every time, and this is not an exhaustive list, but this is a list of all frequent messages, and some of them are cryptic, so we have to understand what exactly means. So if we look at this one, work center in plant has no cost center. So obviously it's kind of, it tells me that when you look at the routing, it has a work center which is not assigned to a cost center. And this can happen in case of a resource also. A recipe which has a resource which is not assigned to a cost center. And that is something that you have to resolve through master data transactions. So go to CR02 or CRC2 and assign it to the right cost center. So obviously this comes up only at the initial stage of go live, or at the time of a new work center being set up. And somewhere here it says cost estimate for this material in this plant is incorrect. Basically means that the underlying material rolled up cost was not right. There was an error, and that's why there was this hard error CK168, and you have to rectify it in case of underlying materials. Another one I have seen very often is MG144. Origin group is defined as a required field in material master, but there is no entry. So it kind of gives you that. So go to MM02 and update it. On that activity error, KL023, it basically says that you don't have the right activity price for the given year, period, version combination. So go to KP26 and maintain it. So we'll look at few more in the upcoming slides. So here it says cost component split costed with value 0. So here again it relates to, no cost was rolled up. So how do I know what correction do I need to do? So it will depend on the procurement type. Procurement type in MRP2 view is a very important field. I'm sure you have seen this. If it says E for in-house production, then you have to have a BOM. And if it says F for externally procured, then you have to have a purchase price. Now, how are you using purchase price? It will depend on your um, uh, valuation variant, where you say that, am I using plan price one? Am I using purchase information record? Or am I using a user exit? So again, configure and then use it to the right data and integration, and that's how we go to the original topic, that product costing and beyond. So how do we ensure that we have an accurate costing? That's where we are using our knowledge of costing. Exchange rate, this is typically comes up when you are buying from international vendors, and your PIR as a currency for which there is no exchange rate, and that's when it gives you an error. So maintain the exchange rate, you should be okay. There are some setup errors related to consumption account, which are also very widely seen. So you maintain that correct valuation class and account combination, or review if there was any error in the valuation class setup. Let's see some more. Value of costing item 0001 in itemization 0. Now this is typically an information message which you may want to ignore most of the time, but be careful, because some of the information messages are telling you something. If the BOM quantity is 0.001 is genuine, then I understand, yes, no problem. But if it was set up as a placeholder and somebody forgot to update it, then it's a problem. Source of supply is another widely seen error. When you have said in the purchasing view, source list is mandatory, but you have not maintained the source list, so obviously maintaining it is a requirement. And again, it comes up with a no price could be determined for internal activity, so maintain the price using either KP26 or the plan price calculation, KSPI, or verify using KSBT. So again, a lot of places you'll see what is the error, how do I explain, or what is the root cause, and what are the steps for correction. So steps for correction obviously require you to go to the master data. So in the coming slides we'll look at some transaction codes which are useful for maintaining the master data. And then subcontracting related error, you have maintained the special procurement type as 30, but then you don't have the PIR maintained for the subcontracting category, so that can also lead to costing errors. And then again, here it's again source of supply. If it's not maintained, then maintain it through ME11. Here are some transaction codes for costing, individual costing, mass costing, and reports. I'm sure people have used CK11N, CK40N, and then CK24 for release, mark and release, CK13N for display, and then CK44 to delete obsolete costing runs, or CKR1 to reorganize cost estimates. Again, sensitive transactions, so use it carefully. There are nice reports available. The one that I'm, particularly I like it a lot is this SP9941000111. It kind of allows you to analyze multiple cost estimates. But because these are resource intensive transactions, so be careful when you run it wide open. And here are some transaction codes for troubleshooting costing messages. So on the material master side, bill of material, work center, routing, source list, PIR, cost center master data, and cost center planning. So as an example, if I want to see is my activity price correct, want to see individual cost center, look at it through KP27, maintain KP26. But how to see a report for multiple cost centers and activities, use KSBT. Same way, When I want to see a full list of recipes, C203 individual one, C223 gives you a production version, a mass list. And same way on the PIR side, ME1M would tell you lots of PIR information. So these are all cutting across multiple modules, MMPO and MMPP and CO are related. Let's look at the account determination fundamentals. Again, this is something that, we have a blog post also on ERP Corp website, as well as on ERPFixers website. So I'll run through this real quick in the interest of time. But basically, it's the transaction and account modifier which are important for the MMFI account determination. And when we look at the procurement of raw materials, BSX for the goods receipt and WRX for the GRIR. Those are used, and at the time of consumption, we use a specific account. So we have one table here which kind of is going to give you some good insight on what is the event or a process, what movement type and its description are used, what is the debit and credit side transaction and account modifier, as well as the GL account and its description. So as an example, if we look at 261, goods issued to order. So it uses GBB VBR, it uses a specific account that you have mapped. And then when you look at the credit side, it uses the inventory credit. So when you have procured a material, it debits the inventory. When you have consumed, it credits the inventory, obviously. And when you're talking about a 601 goods issue, GBB VAX, which is change in finished product inventory, whereas the inventory goes down here. So obviously, as you notice, inventory BSX is kind of common across all, which is used most often. And therefore, you have to, have it auto posting only. Otherwise, it doesn't allow postings. And then this GBB INV is for cycle counts of physical inventory. Write-off is VNG, scrapping. So depending on what is the inventory, usually scrapping is write-off, right? So BSX inventory is credited. But in case of cycle count, you can have both. You can add inventory, you can write inventory down, either one. For subcontracting, it is GBB VBO, and for the tolling fee, it is FRL. So those are the important transactions. Now somebody may say, oh, I need a new movement type. Do I really need it? And then if so, what is the GL account that I should map to? That's where, OBYC comes in picture. But then what would be the movement type and its account modifier? That's where you define in OMJJ. So you can see this in two tables, T30, T030, as well as T156. You can combine them on query or Excel and then analyze if you want to create a new one. I think this should bring us to the close of the topics. I'll quickly summarize this and we'll switch over to the questions with the help of Jessica. So again, we looked at the production planning and controlling integration in accounting for activities. The main takeaway I want to highlight is the configuration may look complex at the first glance, but when you break it down into logical steps or formulae, it kind of simplifies our understanding. The add-on freight, lots of methods available. You have to decide which one suits best for the organization with pros and cons. And then we looked at product costing messages, which are more helpful from day-to-day costing operations. And then we all finally looked at the MMFI flow and the transaction and account key. Note that transaction key is not easy to modify. Account modifiers are something that you can look at to customize it. Typically on cycle counts, so some people say that 701, I want to copy it as 901 and assign it a different account. That's possible through a different account modifier. Again, some resources, details, links for some of the books that I wrote on first steps in SAP controlling. There is a lot of info on the account determination, as well as the integration parts on the material master as well. And then the expert tips part is where I have some of the costing related ones. And then there was one blog post published by ERP Corp, which are the organizers of SAP conference, the controlling conference in September. So they had a blog post where one of these was published on the costing side. Here are the pictures and details of the books. This one is kind of published in English originally, but translated into French, Portuguese, and Japanese. So again, their links to Espresso and Amazon are given here. And the second one is the expert tips, which is English only. This is the S4 HANA Delta for CO book, which is originally published in English, in the process of publishing in French. So it should come up soon in few weeks. And of course, I didn't highlight a lot around material ledger. And Paul Ovigele, the founder of ERPFixers, has a very good book on material ledger published by SAP Press. And there are lots of other books on each of these topics. But it's all around, how to improve your productivity, how to ensure you're making the best out of your system, right? That's what we're trying to highlight. And with that, I hand over to Jessica for any question answer session.
Hi, Ashish. Can you give me permission to start my video, please?
Sure.
Thank you so much. While he is working on that, I just want to remind everybody, for those of you who have not attended our previous webcast, we will be posting the recorded session as well as all of your questions that I've received and the answers to your questions on our website next week. So if you could please keep an eye out for that. And thank you so much, Ashish, for presenting with us today. We always love having you participate, and you give great presentations, so we appreciate that. So we've got a couple of questions. The first question is there an SAP transaction code to display CK13N for more than one material showing all line items?
Yeah, that's a good question. So CK13N, when you look at the summarized view on the cost component side, that's available through that SP99. And I think, let me see if I can go back to that slide. The SP99 transaction that I highlighted with 41011, this one. Now, this one gives you the cost component summary or the total cost. It does not, unfortunately, give you the details of the itemization view. And that's where I've seen most clients customize it for their need to say that I want a mass CK13N or sometimes even CK33. Beautiful transaction compares to cost estimates. But again, you can only do one at a time. So unfortunately, there is none for mass. At the most, you can use this 410111 for cost component view. I hope that answers the question.
The next question is, for freight costs and standard, can we use PIR as a source of data?
For freight cost standard, yes, of course. So again, here you'll have to be careful and define that PR00 is for my base cost and FRA1, let's say, is for my freight cost, and then you want that to roll up in the purchase order. That should be absolutely be possible. Yes.
For raw material, usually we'll be moving average price control. In that case, the costing sheet or additive cost cannot be used, ?
Yeah, that's absolutely correct. And I think here in the entire freight example, the assumption was you are using standard cost and you want to capture PPV. But if you say that I want to get it only on the moving average price, which means that PPV is not a requirement, you're kind of throwing that requirement out of the window. But then it comes to the additive cost for for freight on such moving average price materials. You don't have many choices, unfortunately. That's the disadvantage of using moving average.
The next question is, what is the best way to capture incoming freight for raw material with MVP?
With moving average, I think this question is very similar to the previous one. So moving average, I've not seen many requirements that say that I want to capture freight separately. But I would say that, on the actual side, we can say MR22 will help you. But on the planning side or the purchase order, you are only saying that, I'm going to value my material based on whatever goods receipts have taken place. And that's what determines how the moving average price is calculated. So if you have to separate out freight in that one, you can't separate it out, but loading it on the standard on the moving average price can be done through pricing conditions in purchase order. That's what I can think of.
Next question is on T code KKML or CK9099 of the ECC 6. Is there a parallel T code or CDS view and S4HANA after upgrade?
That's a good question. So I haven't come across this requirement. I'll have to look through this and find out. But KKML, as we know, is our material ledger drill down reporting, right? And then CK9099 is one of the many reports in SAP which allows you to do details of the cost estimate, similar to CK39, but has a little bit different feature. But with regard to CDS view or the core data service view in S4, I haven't seen that much. I'll add the response to this in the answer that we put on the website with the help of Jessica. So you'll hopefully hear from us then that time.
How about using freight unit linked to inbound delivery and do freight settlement as batch jobs for GR and done? This will load actual freight costs and will not need any reconciliation.
Okay, so you're trying to link it through the inbound delivery. So I assume you're trying to use the transportation cost that is attached to the delivery, right? That's possible. That's possible. But again, you'll have to do some estimates that how much of my inbound delivery, what is the transportation cost for my inbound delivery? If I understood that question, that's what you want to do here. Yes, the reconciliation part comes up more towards the actual, and then this is one thing that you'll notice that the team may have seen is that when it comes to standard costing, the options are multiple, but the actual part is where the process breaks down. Either you are talking about blanket POs or consolidated POs with freight vendor, or you're talking about trying to match each and every receipt to the purchase. So yes, maybe this inbound delivery and freight settlement may work, but the actual part also will have to be looked into. But good thought, yes.
If you have multiple PIRs and multiple source vendors list priorities, then how does the evaluation strategy work?
Correct. So that's a very classic question. There's a flow chart, and I'll try to look through it and put it in the answers. Basically, it tells us what is the strategy that SAP uses for valuing multiple PIRs. In general, the rule of thumb is the cheapest one is used for costing. But then if you have a source list involved, then it will prioritize the source list part. And if you have, other rules maintained. So in general, it's the cheapest one, but source list can be used to overcome that.
For write-offs, can I define accounting treatment using reason codes?
Okay, so reason code, by that you mean the reason code defined in the goods movement posting, right, in NIGO. Now, usually reason codes are good for reporting and analysis purpose, but as far as I know, it does not influence the accounting treatment. So there's no good way to highlight that if reason code is so and so, I will use the account modifier so and so, and therefore the accounting treatment will be different. So my first initial answer is no, that's not possible out of the standard SAP. But we have to see if there are any creative ways of doing it.
So we have several more questions, but due to time, I want to go ahead and end the session now. And once again, for those of you who didn't have your questions answered, we will be posting the questions and the answers along with the recorded session next week on our website. So just keep an eye out for that. You will receive an email if you attended today's session and registered for today's session regarding when we'll be posting this. And once again, Ashish, thank you so much for presenting with us today. We love having you with us, and we look forward to your next presentation.
Thank you, Jessica and ERPFixers, for giving me an opportunity. It was a pleasure talking to all of you. Thank you.
Thank you, everybody who's attended, and we look forward to seeing you guys at our next webcast.